Hello and welcome to this edition of Closing Trades. We're coming to you live from the Motilal Oswal 18-hour studios, and what a respite finally to see on the screen, because at one point in time, about an hour or so into trade, we were down about over 200 points. From there, we've seen quite a magical recovery. That's all I would say, because we were on the brink of even breaching that 22,800 print. So on our way now to that 22,000 or rather 23,000 mark. But let's see, it's getting a little skittish once again, because that uptick is getting a little bit sold into. So it's a bit of a tug of war out there. While the recovery from the lows has been good, there are still names like M&M, BEL, Reliance, which are still under pressure. I mean, add to that even iShares, which fell, remember, almost 6% yesterday. Today, too, it's down 2%. Nifty Bank, Infosys, ITC, these are names which are still struggling within the larger universe. But financials, and especially the insurance plays, they are the ones which are actually holding out well. SBI Life, HDFC Life, there's Bajaj Finance, Tata Consumer, Tata Steel, L&T. These are the names which are actually perking up. So net result is not as bad as yesterday. Not just the recovery from the session lows, but sectorally, some of those sectors are pushing into the green: textile, metals, financials, etc. There's, of course, SBI Cards also, which is holding up 3.5%. There's CAMS, Ashok Leyland, SAIL, which is holding up nearly about 6% right now. And Angel One has seen a big pullback today. So 2304 is where that stock is, about a 6.5% uptick. So selective buying, or I don't know, short covering. Perhaps Kunal and Naresh will explain that a little bit better. Kunal, what's it looking like? Are we out of the woods with today's bounce?
It looks like, at least for the near term, there seems to be a strong indication that maybe a near-term bottom could be at play for the indices. We've double tested the lows of 22,800 for the Nifty, and that and from those levels itself is where we've seen the bounce for the Nifty. The small cap and the mid caps, of course, have formed a lower low, so that's a classical sign of divergence. Yes, on an intraday basis, we saw a decent recovery. At one point, I think the Nifty was up some 50 to 100 plus points, and now we've come back again into a corrective phase. But then that's going to be the volatility would sustain for at least another couple of sessions. What matters over here is that if we don't break below the supports which have been established, so 22,800, for example, now becomes a very crucial support from the short-term basis. And if we don't close below this level, there is all the more higher chance that we may see a gradual recovery on stock-specific front, and then a recovery for the indices as well.
Right. We also have Gurmeet Chadda, who's with us on the show right now, along with Naresh. Gurmeet, afternoon to you. And do you think that this sort of a fear in the market is purely based on valuations, or is just general fear that's gripped the market right now and nobody wants to actually hold on to any positions?
No, there is definitely some panic, especially in the small mid cap, which you see the price action. A lot of the fall yesterday and including first half today was on lower volumes also. And I think a few statements also here and there by seasoned portfolio managers did really help the cause. So, but it's not that we've seen this for the first time. We don't question markets when they go up very sharply, when, small mid cap indices gave 40-50% return on a year-on-year basis. So I think, so that's the nature of the beast. So if you see small cap index, that's not down almost 20%, from the peak. So I think, but, one only constructive thing here is that the lot of the risk right now are on the table, right? Whether it is related to tariffs, whether it is related to valuations, I think are becoming reasonable in large pockets of the market. I don't agree with the fact that everything is expensive. I think there's a lot of pockets where valuations are reasonable. Third, I think, we probably need to watch out the dollar index and the currency movement. I think sharp appreciation in rupee also yesterday from 88 to almost in the morning, I saw 86.5. But I've also added to the FI sell-off because there's a bit of a currency play also in the near term which happens. But as I said, good investors actually take advantage of corrections. They don't take fear. So if your goals are long term, you don't have to watch this on a day-to-day basis and just stay focused on your overall financial plan.
Gurmeet, but that's when we're in the money and you had kept some powder dry, right? I think people have been so spoilt with the kind of gains that they've made within the small and mid caps that they're still sitting on hefty gains. It's just that it's halved from maybe just about 8 odd months back. I think the bigger question is, do you exit small and mid caps completely, protect your capital, and then selectively start buying now after the correction that's played out?
Don't think you are so good to time it, Aisha, most times, right? But as I said, has to be more milestone driven. So let's say you had allocated some money to small and mid caps, either through fund or stocks, and your financial goal is nearing, which is next 3 months from now, 6 months from now. Then obviously it makes sense to systematically, move into cash because your goals are approaching. But if it's long term, I really don't see much sense there. Secondly, as I said, there are a lot of pockets where the valuations are becoming attractive, and a lot of positive things also happen with the lag. So the rate cut, the tax cut in the budget, liquidity infusion by RBI, OMOs being done. And even if you see the rural, there are a lot of green shoots even in the rural recovery. So I heard M&M management talk about 15% growth in tractor sales this quarter. So I think the positive data points also will have a lag effect, and we should ask ourselves: is this problem structural or is it cyclical? I don't see India having a structural issue as far as it's not that we are getting into recession and things are going to go loose. I think gradually growth has bottomed out. You gradually see improvement, but you have to be a little patient. So sometimes it's just good to just write it out. Sometimes not doing anything is the best thing to do.
All right, sometimes not to do anything is the best thing to do, and we'll talk more about the markets after the short break. But India Energy Week 2025 continues to drive discussions on innovation and sustainability with over 500 speakers and 700 exhibitors unveiling transformative energy solutions. The exhibition area of the conference is offering a first-hand look at the latest technologies from AI-driven fuel management to futuristic clean energy solutions. One such initiative comes from BPCL, which has recently made entry into the food and beverage space with its in-house premium cafe chain, that is B Cafe. The setup of the cafe at the India Energy Week 2025 drew extensive footfall on just the first day. Speaking to Times Network, Harsh Joshi, who is the non-fuel business BPCL, revealed how the cafe focuses on enhanced customer experience and provides high-end coffee and snack offerings at a cheaper rate. Have a look.
At B Cafe, we try to offer a very premium cafe experience at a very value for money price range with a world-class product. Currently, we have 60 plus B Cafes operational across India with 80 plus work in progress. And we are coming at major highways, metros, tier 2 and tier 3 cities. We have a product range comprising of 3 major product categories. We have a full range of hot and cold beverages. We have a full range of quick snacks. And we also have a limited range of impulse items, mainly top 5 categories which are highest selling in MRP categories. The objective of B Cafe was offering a affordable F&B option which is standardized, which is hygienic, and which is having a consistency in terms of taste across India, across the length and the breadth of the country.
Welcome back. You're watching Closing Trades right here on ET. Now, if you look at markets, yes, we are down and out, but nevertheless, very good recovery from the day's lowest point. 0.5% down to coming in for the Nifty. When you saw the sharp recovery actually creep into the markets, it was Nifty Bank that was actually lending the support to the benchmark indices. And Naresh, let me come to you and ask you, do you think that's the way how it's going to be, especially when you talk about the PSU banking name? Because if you look at the Nifty PSU bank sector, that's the one that has actually breached into the positive territory today.
So the Nifty PSU bank sector has already been correcting for quite some time. If you look at some of the smaller banks, they've already fallen 30-40% from the top. If you were to look at the PSU banking index itself, it had made a bottom around 64 to 6,500 on the election day when the Nifty made a bottom of 21,300. Today it went sub 5,900, which is where it is equivalent to a 21,000 to 20,000 Nifty. So the indexes itself corrected from 8,000 to 6,000 or lower. So it's already been a 25% correction here. So we could expect a pause, and State Bank of India has been holding on to the 720, 730 mark. So overall, looks like a pause here in the banking space, at least for now.
Right. So that's the take coming in on the PSU banking space. Coming to you, actually, Gurmeet, I wanted to get your sense, especially when you talk about these metal names, and especially the metal sector, given the fact that right now that entire space would be extremely volatile based on the news flows that you're actually getting with Trump tariff, or what's exactly happening with the Chinese markets, or even Chinese economy. How should one actually play this theme, and should one actually go ahead and play this theme?
So I think for us, it's basically a avoid, uh, you know, sorry. Sorry, my bad. For us, it's basically an avoid till the time these tariff issues are sorted. There's too much regulation on it. We do like some non-ferrous names like copper because that's an end use as far as energy demand is concerned. So we'll tactically look at some opportunities in terms of non-ferrous space, especially copper. But other than that, for time being, we'll avoid. In broader space, if I take commodities and building material, I think cement volumes have been very good. There's been recent update coming from a lot of pairs. There's some consolidation also happening. So, if you get good corrections in names like ACC or Ultratech, this may not be a bad time. The overall commentary as well as the overall volume uptake has been pretty solid as far as cement.
Right. Gurmeet, just wanted to understand where is it that you're recommending buying other than, of course, the sectors that we just flagged off, like you just talked about cement and metals. Where else are you finding opportunities after the recent correction in the markets?
I think financials make a lot of sense. I think RBI stance, although officially may not have changed, but they really want to now balance growth, inflation, and liquidity. Because if liquidity is deficit, any transmission, either of lower rates or in terms of credit demand pickup, won't happen. They've also delayed the liquidity coverage guidelines by a year, which also had, if you strangulate banks more, eventually the credit demand suffers. I think initially there will be minor compression in NIMs because deposit rates won't come down immediately with the rate cut. But eventually the valuations are very reasonable. The entire bank Nifty today is 13, 14 times earning, less than two books. Most of the banks are around book value. That is SBI, Axis Bank, Federal Bank in the mid-cap bank space. So valuations are pretty reasonable in my view. That's the sweet spot of the index. We are looking at some consumption names which will get a boost with changes in the budget. We are looking at some names like Trend, large correction from the peak. We are looking at some travel and tourism names because that's where the momentum is pretty good. Whether it is hotels, airlines, some of the visa plays, etc. And we are adding some, space where it's beaten down more, but the order book visibility is there for next 3 years, 5 years, 7 years. Select names in defense. And bit of rotation maybe. I think even chemicals where the end use is consumer is best. So I think right now the market is offering you a lot of opportunities. And if you see, Aisha, now in the market, names which were not doing well, which is, for example, FMCG names, nobody was really looking at an HUL or a Tata Consumer. Nobody was really looking at chemicals. Some Bajaj Finance technically is a consumption play. It's a credit-driven consumption, retail consumption play. So markets are looking at pockets where valuations are more reasonable. And I think that's where probably you will see some rotation may happen.
Right, so that's some of the sectors there where you could see rotation actually come in, at least financials topping that list, and select consumption or defense name also looking pretty good given the fact that the flip that they've got actually from the budget. Kunal, let me come to you and get your view actually on the IT space because, I read some report a few months ago or rather a few days ago which said that the outperformance, the next level of outperformance would be led most likely by banks in the IT sector. Is that what the charts are reflecting by any chance?
Banks, yes, not sure for the IT because I think most of the large cap IT stocks are actually seeing correction. So there was a point where mid cap IT stocks, they did exceptionally well in 2024. In fact, start of 2025, early, I think just few weeks of 2025, we saw names like Coforge and Persistent, etc. These were few names which had done exceptionally well. But even these stocks have started to show signs of a correction. Now, when you see a sector outperforming and mid cap stocks outperforming by a huge margin, large cap stocks being a lot more divergent, then you expect that in the heat of the market corrections, these are the stocks which could probably underperform. So, and even the Nifty IT index as such, we've come back into a point where the Nifty IT index is retesting the lows of 41,500, 41,600 mark for the third or the fourth time in the last 1.5 odd month. So that again indicates that it's retesting the lows time and again over a short-term basis, which means we could be looking at the IT index going through maybe one more round of pressure or a correction.
Okay, let's get in some closing strategies on that note. Before that, Gurmeet, we'll let you go. Thanks as always for making time and speaking with us. Naresh, what's on your closing trade list?
So that's about UPL Limited. That's one stock which has broken out and changed trends after many years. In the near term, also the stock broke out and is now retesting the recent breakout points. Today also is sustaining well. So expecting this to actually continue to lead from here on. So a stop loss below 610, expecting a bounce towards 630.
So that's the closing trade coming in from Naresh. In UPL it is. Kunal, what about you?
So I'll go with the buy on Bajaj Finance. My expectation is that the stock which had done exceptionally well till just about last week or so went to a correction. Now almost 300 points correction for Bajaj Finance from 85, 8600 to 8200, 8250 mark where it's trading right now. So this could be a good contra buying territory for Bajaj Finance.
Okay, a contra buy for Bajaj Finance right now. We'll take a very quick break, come right back. We'll continue tracking the last half an hour of trade this afternoon. But how is it that you should be playing the small and mid cap story against market volatility? Here are some of the top experts and their opinion on the same.
See, valuation was the first problem. So that was the first thing we focused on. But after valuation was a problem, what happened was that you had a situation where in the primary market, we started seeing too much of fundraising, whether in the form of SME IPO, lot of people actually investing in unlisted stocks, then too much of secondary market, primary selling by private equity, lot of fundraising by companies. So the problem is a combination of valuation and too much of fundraising. There is no doubt about the fact that a 20-year SIP in small cap or a 20-year SIP in small cap will beat a 20-year SIP in mega cap. But how many people are 20-year SIP investors? That is the challenge of what I have seen in the markets, and that is the biggest challenge at this point of time.
My recommendation is that please continue your SIP in small and mid cap fund over longer term time horizon, 5 years, 10 years. Moderate your return expectation, most importantly. Last 5 years, point to point return on small and mid cap is 25%. That's unlikely to happen in next 5 years. So don't get disappointed when returns over next 5-10 years are in high single digit or low double digit.
I personally think that there's more juice left in mid and small cap. Yes, they've corrected. Yes, maybe it was across the board. It was across the board. Maybe that may not be there, but I don't think the story in small and mid caps is over. Yes, the markets are bad, and we know that when markets correct, we forgot, thanks to the last few months of action, that even though markets were correcting from September, the small and mid cap held out for a few months. We were quite used to seeing Nifty 0.5% down, but mid cap 1% higher. But what we saw in Jan was Nifty 0.5% lower, but mid caps 2% lower, 2.5%. So the catch up that has happened very sharply in the month of Jan. I still feel that small and mid caps, it's not something that you move your portfolio from 0 to 100. You chuck away all your small and mid caps and only have a large cap portfolio. I don't think so. I feel that the catch up that will happen will still be faster in small and mid caps.
Well, a rebound definitely today from the lows of the day, but we can't say that we perhaps will close into the green. But again, you've got still half an hour or so to go. Let's see which way we actually head. For now, we're back at that 23,000 print at least. So that's a bit of a reprieve, 47 points lower still. SBI Life, HDFC Life, Bajaj Finance, Ultratech, L&T, these are names which are actually propelling the markets higher. And of course, Bharti along with that. But that's not quite the case with the Hero MotoCorp, M&M, Reliance is still down 2%. There's ONGC, ITC, some of the tech heavies like an Infosys, TCS still in the red as we speak. And even ICICI Bank is struggling to claw back into the green. But let's welcome on board Rajat Sharma too and find out what's his opinion of the markets right now. Rajat, do you think the selling is overdone or do you think there could be some more in store?
Good afternoon, Aisha. So, I think there could be some more selling in store, but that would largely be driven by uncertainty and panic, which is very sentiment driven with the investors. But if you talk about, fundamentally, I think we are oversold. And why I say that is because if you think about what's leading to this correction in stock prices, the short answer would be nothing. We were expensive 5-6 months back when Nifty was trading at a price to earnings multiple of 24.5. Today we are trading at about 20.4, and we've fallen about 15% from those highs. And what's happened in between is not just that stock prices have come down, but earnings have also improved. So if you look at the Nifty 50 earnings for Q3, 49 out of 50 companies have reported their earnings, Hindalco being one which has still not. Look at the earnings for financials, year on year, 21% better earnings, healthcare, 20% better, information technology around 14% higher. So I think the only sector where earnings were sort of weak was metals and materials, the likes of JSW Steel and Tata Steel and stuff, but that was because of, steel and metal prices, which have been falling. So even if you see overall, the Nifty earnings have improved close to 13.5, 13.7% year on year, which is a good number. So earnings are improving. There's a slight consumption slowdown. So, that makes you wonder why this panic, why this selling when, we should actually be bullish right now. I think the reason is primarily that, the US is having its, what I say, the Modi movement, which we had in 2014. You have Donald Trump coming in, making a lot of noise about increasing tariffs around the world, bringing a lot of business into the US, rupees depreciating, FIs are moving. It's like everything will be done in the United States. In the United States and from world over, a lot of money is moving there. And if you compare Indian markets to US markets, we're actually far cheaper and offer better growth going forward. Indian markets typically trade at a higher valuation than US markets. And what's happening right now, I just spoke about Nifty being, at a multiple of 20. You have S&P 500 trading at a multiple of 30, which typically on a 10-15 year basis trades on a multiple of 18 to 19. So look at how expensive they are. NASDAQ is in stratosphere, 42, 43, which is 30-40% higher than where it trades. So, eventually this will settle down. It may just take a little more time. But what we're seeing right now is a lot of panic in the market, and it's unfounded. Like I see earnings improving. The budget was very good. It should drive consumption. So next 2-3 quarters, once the sentiment changes, and keep in mind, FIIs have been selling constantly. At some point, when the tide turns and sentiment changes, a lot of people who are waiting for markets to fall more could possibly be left standing by the side, and they may just miss out the best times to invest. That's my view.
Let's take a look at the markets, because we've seen steady recovery now once again for the Nifty Bank. That one has actually come into the positive territory. A solid recovery from the day's lowest point for the broader markets as well. But coming back to you actually, Rajat, and I wanted your view coming in on some of these names which everyone's been actually now hoping that would do better is the consumption space, be it consumer discretionary or staples. Which side of the fence are you in?
No, absolutely. I am in no doubt that a lot of these stocks will do very well going forward. Again, purely because of the valuations at which they're available, they are extremely cheap. When you talk of FMCG, the likes of, let me talk about two of the stocks which we've added recently and which I've never owned before, one being Asian Paints and the other one being Hindustan Unilever. They're available at almost a 50% discount to what their, peak valuations were. Asian Paints, for instance, the company had a 59% market share in paints industry. Today, after all this competition coming in, Birla, Nuvo and JSW and Pidilite and AkzoNobel, Indigo, Berger, all these players have not been able to dent its market position. They still have a 50% share of paints market. So, they'll probably wait for a lot of these new guys to burn out the cash, which we've seen happen with many of these companies which have a solid moat before. It happened with Colgate when Pepsodent came in, does not exist now. They'll eventually increase the margin that they pay to their distributors in 1 or 2 years. And they're a logistical marvel. They're everywhere. So, these are the times when these kind of companies are facing external pressures. It may take a while, it may take a year or 2 years, but it would possibly outperform the market for the next 2-3 years. So I am really, really positive on consumption because you're getting it at a time when the sentiment is so negative. Earnings haven't taken the kind of hit as they should. It's not like nobody suspects that Asian Paints and HUL will cease to exist. It's the first time that they've seen negative growth in earnings in the last 10, 15 years, the last 2-3 quarters. But these will bounce back, I'm in no doubt. So you should add these kind of stocks when everyone is fearful of adding these. Consumption is one of the favorite places for me to add stocks right now.
Quite an interesting thing there. Kunal, what's the reading on the charts for both Asian Paints and Unilever? And not just has the selling stopped, but can these stocks actually give you better returns than any other?
I strongly believe so. I think especially for Asian Paints, I think that's a stock which I would be very bullish on from current levels. My sense is that chart-wise, it's formed a classical bullish RSI divergence, good volumes, a lack of incremental sell-off into the stock. Yes, the volatility is keeping the stock, stock price trends a lot more unstable. I think just about last week or so, the stock was at 2300, 2350 mark. And then in a matter of a few days, the stock has come back to sub 2200 levels. At least that's where the stock was on intraday basis. So which means that the stock is still very volatile, and that generally happens when the stock nears a strong support territory. That it tends to be a lot more volatile, spends some time over there, consolidates, and the range becomes more or less stagnant. But the price action becomes a lot more choppy. So I would believe that Asian Paints at current levels could be a very good attractive bet from a long-term play. My belief is that the stock should come back to at least 2500 to 2600 over the next 1 to 3 months. Same would be the case with HUL. Now, interestingly, HUL has shown much higher volumes than many of its other peers in the recent price action move. I think last week or last month there was the bullish hammer formation for HUL when the stock had fallen sub 2200 mark or just closer to that level. From there, the average volumes have risen for HUL. The stock has apparently made a higher low on a relative basis as compared to the previous month lows. So even that's an indicator that the stock could start to look very attractive. So it could be a good value territory buy for HUL as well.
Right, so that's the comparison coming in some of these counters like Asian Paints and HUL. But on that note, let's talk about the India Energy Week. My colleague Prakash caught up with GAIL's chairman Sandeep Gupta to understand his outlook on gas prices going ahead and the impact of domestic gas supply cut on the company.
As we are aware, because of the supply which is constrained from certain part of the geographies because of the sanctions, the prices are high. And while the pause has been lifted, no new project is likely to be commissioned so soon. So I believe that the prices may remain stiff for some time. But with more projects coming in US and also in Qatar and various other geographies, it is a definite possibility that the prices should soften going forward. And you never know this Ukraine-Russia war, if supposing there is a negotiation on this aspect, I believe more Russian gas may also be available to the world, which will also have an easing support in the prices, and the prices should get soft.
So along with that, one question on city gas distribution companies. Of course, there is some concern when it comes to supplying sufficient domestic gas to the city gas distribution companies, and government has made some significant reduction when it comes to gas being supplied from nominated fields. So in that context, do you think that the city gas distribution companies would be looking towards GAIL to have long-term contracts or a spot purchase for them to meet domestic requirements? So do you think that it is going to open more opportunities for the company?
Definitely. They are at present also sourcing gas from GAIL, and we are supplying out of our long-term contracts also to some of the companies, especially the group companies. And yes, definitely because of the cut in the allocation to the CGD companies for their DPNG and CNG supplies, they will have to source more and more RLNG. And definitely GAIL will have a opportunity there, sourcing more gas and supplying to such CGD companies.
In fact, on the sidelines of the IVCA conclave, ET Now also caught up with K. Rajaram, the chairman of IFSCA, who shares his insight on investment scenario in India currently.
Our focus is now shifted to Viksit Bharat at 2047 because that's the big play. Because in the sense that Honorable Prime Minister's vision of making India a developed country requires ton-loads of capital. Yeah. So Viksit Bharat at 2047 means different things to different people. But let's say from the corporate world, I think it's about Indian companies becoming global champions, scaling up, becoming bigger and capturing a part of in the global marketplace and so on and so forth. So this will require them to be cost efficient in terms of raising capital as well. So I think we want to be a platform where corporates are able to raise capital in a very cost efficient manner, be it debt or equity or other financial services. And that is what we have achieved in large measure, because today a large number of Indian corporates come to GIFT City banks for their debt and for other financial services, including hedging and other kind of financial services. So our focus is not only in creating a positive environment for Indian corporates, but also for foreign investors.
So you also spoke about that your focus will be on mobilizing the international funds, bringing into Indian markets. I want to know, what about your strategies? How will you attract more of the consumers?
Yeah, see, the underlying philosophy is to actually to make bring in a high ease of doing business and reduce the cost of doing business to international levels. So the tax efficient way in which I think a fund manager is able to set up a fund management entity actually makes it very attractive, because the tax regime provides a 10-year tax holiday. There is no GST, then there is no commodity transaction tax, security transaction tax, etc. So a variety of other tax provisions also there, like a lower withholding tax on debt instruments. So all this makes fund raise and fund management out of GIFT City attractive. So that's why I think today, as of now, there are more than 200 funds which have been set up by about 140 fund managers.
Where do you see India? What will be your goals, considering all the economy, regulatory norms? Also, you mentioned about crypto. It's not in your radar yet. Can you mention why is that and how will it?
No, because fundamentally we are here to solve a particular problem, a problem of enabling cost-efficient capital raise for India. Yeah. That's our biggest problem. So we don't want to be everything for everybody. Let me put it this way: digital assets are not in our radar at this point of time. So this is, a business which we are not really actually trained to do. I think.
All right, let's just address the flash on the bottom of your screen. You have Jubilant Foodworks that's come out with their quarterly earnings, where you have the profit that's fallen on a year-on-year basis. Let's see at the operating levels, because the EBITDA is looking healthy on a year-on-year basis. The margins have come in lower, 18.7% versus 20.3%. It'll be key to watch out for same-store sales growth coming in for Jubilant Foodworks or LFL to understand actually where the tilt has been actually going ahead, especially for these QSR plays. And talking about QSRs, then Rajat, let me come to you and get your view on the QSR space and those plays. Because 2 years ago, QSR was the buzzword, which has now been taken over by quick commerce.
Yeah, if you ask me, I have not spotted anything in, either QSR or fast food or any of these quick commerce companies which is available at valuations at which I'd like to add these. Zomato as a company, I think, is doing very, very well in terms of its business, because this is a business which is here to stay. Be it home delivery or fast delivery using Blinkit. But the valuation at which it's trading right now, it's only natural that this will correct and come down, and that would be a right time to buy it. As for Jubilant Foodworks, this is a stock I've never liked, because this story is long played out. There's intense competition in pizzas and burgers, for that matter, even Burger King, the company which renamed itself Restaurant Brands. All of these are companies operating in spaces where there's very little margin, intense competition, not just from listed players, but from unlisted players as well. So I don't like anything in this space right now.
All right, not finding anything interesting in this space. Kunal, on the charts, how some of these QSR plays actually looking to you? Be it Jubilant Foodworks, Westlife, how are they looking?
Yeah, they're looking quite okay. In fact, Jubilant Food till last week was actually looking quite strong. The stock was perched very close towards its multi-week highs. Of course, in the last 3-4 days, the stock has gone through a 6-7% kind of a correction, 40-50 points, from its recent swing highs. But then I think the stock has done reasonably well when you look at this from the previous lows of 500 or sub 500 levels in 2024 for Jubilant Food, and the stock has been a lot more consistent, at least for the second part of 2024, where at one point the markets and many of its peers were a lot more volatile. The other stock which I've been very bullish on over the last 2-3 years has been Vector Foods. That's a chart which has been looking extremely strong from 400 levels. The stock at one point went up to almost 2000, 2100 plus mark, and it's now come back to that 1400 kind of a territory. So I think even at current levels, I would probably expect the stock could be a good addition to the portfolio pick from the QSR space from the mid cap end.
Right, okay. Since we're on the subject of consumption and given the large pool that it is, we were chatting with Jignanshu Gaur from Bernstein earlier today about what he's liking within the consumption space that he tracks, non-FMCG, and here are his top ideas.
I am outperform on DMart and Trent, the two retail large stocks that I cover. I think Aditya Birla has a lot of cover up to do, so I'm underperform on Aditya Birla. I do not cover FMCG so far, but on restaurants, I am outperform on Jubilant and Devyani, the two larger players, while being underperform on Westlife and market perform on Sapphire.
Okay, in the meantime, Ashok Leyland has seen quite a bit of spurt. There's Angel One also, which is looking strong. Sale holding higher by about almost 6%. So some of these names are looking good as we speak right now in trade. Other than that, of course, Ashok Leyland, the management commentary, the fact that they've highlighted that sales in international markets are showing strong growth and they only expect this momentum to accelerate, that's something that's gone down well with the street. The stock now sitting at the high point of the day, about almost an 8% uptick. For sale as well, there's been an increase in their sales volumes over a low base that they clocked in second quarter. Debt slightly has reduced and valuations are looking a lot more attractive than earlier, and that's auguring well for sale. Naresh, let's get your thoughts in on these two charts, both Ashok Leyland as well as sale.
So Ashok Leyland being a result reaction would wait out for some more time. 220, 225 would be a resistance. Same is the case with sale. The only reason sale looks interesting is the stock has corrected from 175 all the way down to 100 and has made 3 bottoms around that area. If it can cross about 110, 112, then it would be a reversal. So would wait and watch for a few more days of price action to see if it can follow up on today's buy.
On that note, actually, let me come to you, Naresh, back once again and get your BTST ideas.
So first would be a buy on UPL. The stock looks interesting. Good recovery. Stop loss at 610, target price of 630. Second would be a sell on Persistent, which is looking like a breakdown. Stop loss at 5750, target price of 5650.
Kunal, what about you?
I'll go with 2 buy calls. The first one is about SBI Card. Very interesting chart. The stock formed a bullish hammer formation in the first half in the morning, and then moved towards 790, 800 plus kind of a breakout, and from there it's moved up higher. So would look out for 840 as a revised target of the upside. Stop loss could be kept at 785. And the second would be a ban CAMS, a stock which has been beaten down significantly, almost a 20 to 25% correction in the very recent past for CAMS. I think at current levels of 3500 would suggest a buy with a target of 3650. Stop us at 3435.
In fact, not just scams, you got an Angel One also, which is spurt up very nicely, about 7% higher on the stock. In fact, we were getting in the FI perspective on the market as well, and hear it out from Jonathan Garner as well as Samir Arola as to what explains the weakness in the market, what should be bought right now, and when FIIs will come back to India.
Majority of the clients that we talked to last week in India were optimistic about that June quarter end, which would mean the market should start to stabilize, frankly, round about now. And obviously, we just had the monetary and fiscal measures last week. So that would be the base case. I think there is a minority opinion that this is a more structural slowdown in earnings for India. We don't agree with that. I've actually moderated our overweight. We were more overweight India a year ago than we are now, but it is still for us a core overweight holding. And I did come away from the trip last week and wrote about it. I wrote about it in a note on Monday, feeling that it really does deserve that core overweight position, and more likely than not, as the year goes on, the market will perform better and better over time.
Small and mid cap are more or less in line with 500 plus. As I was saying, add 1.5% also if you want to add per annum because of the new investor class. If it is come in that range, then it's okay, because that is the historical 10-year, 50-year, 20-year number, that in the end, small caps, mid caps, large caps, there is no difference. Actually, mid caps slightly outperform everything. And I think one reason for that is that mid caps are discovered small caps, which have already sort of little bit matured. So they are able to handle the economic uncertainty, some order cancellation, some interest rate hike, etc., a little better than the complete small caps. And therefore, actually, if you see, I mean, it's just you need a few change the periods, and you can see that mid caps outperform by like 1% per annum and small caps don't. But whenever you're in the middle of a cycle, then the small and mid will look as if, you know, they are outperforming by 6, 7, 8% per annum for the previous 2-3 years in which that cycle you find them, and then they give it up. Now, sometimes I used to think that because of these flows, maybe the giving up will be gradual, maybe it will be consolidation, but in the end, when they correct very fast.
All right, so that's the view coming in from Samir as well, given the fact that markets right now are seeing a very healthy set of recovery. At least with the Nifty Bank, we're holding strong in the positive territory. Few minutes to shut off a trading session, but you cannot not help notice what the broader markets have done, because there's a steady set of recovery coming in for the broader markets. We are mildly in the negative territory and hoping that we are only able to build on this recovery come tomorrow, Aisha.
Oh yeah, absolutely. But let's see, tomorrow's another day. We'll pick it up when it comes. But Kunal, does it seem like there could be a maybe continuation of this bounce tomorrow?
Yeah, there should be. And I think such kind of days where there is initial, first hour of panic selling, margin adjustment, etc. We've seen those dynamics playing out earlier also, and then followed by a strong recovery. I think we generally expect that the markets get into a stable territory from thereafter. So even if we don't expect a more sharper or V-shaped recovery, but even if you see those indices a lot more stable and the market breadth less volatile than what we've seen in the last 2 days specifically, that would still be a very positive sign.
Okay, on that note, let's wind it up right here. But Rajat, Naresh, Kunal, good to have you guys on the show as always. I'm going to hand it over to Snehi now for the closing trades.
Let's take a look at how today's trading session has panned out. We may be absolutely flat on the Nifty coming in because we're dilly-dallying across the red and the green, but nonetheless, it's been a stellar recovery coming in for the Nifty 50 today. You had more than 150 points on the index from the day's lowest point when Nifty has recovered. We're currently above the 23,000 mark. Let's see for the next couple of minutes if we're able to sustain to these levels. Let's pull up a Sensex, because Sensex to 1/10 of a slightly pressure coming in, 1/10% cut coming in, but nonetheless, Sensex has also seen stellar recovery from the day's lowest point and is above the 76,200 mark for now. Let's take a look at what the broader markets are doing, because more or less the broader markets have performed very well in today's trade. We have seen cuts of roughly 0.2% across both mid cap and small cap, but if you take a look at the overall intraday basis, the lows that we started from, we're anywhere between 2.5% and 3% higher from the day's lowest point when it comes to both of these broader markets. So very good performance coming in from Nifty mid cap and small cap. But whereas if you take a look at these on an intraday basis, on the spot basis right now, 0.2% cut is where both of these indices are trading. An advanced decline ratio in the favor of the declines, but it's more or less evenly distributed, slightly heavier tilting on the decline side. India VIX rather flat. We were at 15.2 at one point of the day. We've simmered down and around those 14.8, 14.9 levels now, 14.9, close to 15, but nonetheless only a 0.5% spike coming in on India VIX today. So that is also something that is looking very, very good in today's trading session. Let's take a look at some sectoral gainers and losers in today's trading session. Through and through, it's been the day of Nifty PSU banks. They've been looking healthy ever since the get-go. You have Union Bank, Maharashtra Bank, Indian Bank, Bank of India. All of them have done very well today. Watch out for Bank of Baroda, because that company will be mulling fundraising tomorrow. So Bank of Baroda is also in focus on the back of that. Along with that, you have 4 other companies that will be mulling fundraising tomorrow as well. But other than that, let's talk about sectors once again. Nifty Realty continued to be your biggest sectoral loser, almost 3% low, and it's been a constant laggard. Even when the markets are doing decently, this sector has been tanking away for the last couple of trading weeks or so. Now, Nifty Metal has also managed to finish the day in the green, so good move coming in from Nifty Metal. Nifty Bank also somewhere over there. FMCG, Energy, Pharma, IT and Auto, along with Nifty Realty continue to lag, and these are your indices that have closed in the red. Let's take a look at some stock mentions then. All of this exuberance that we've seen in the market was on the back of the AMFI data, because SIP levels were above 26,000 crore for the second straight month. But you have SAIL that on the back of earnings reaction was up 5.5%. On the flip side, Vodafone on the back of earnings reaction was down 5.5%. So that is something that doesn't look good for Vodafone at all. Ircon International was also down 5.5%. Very tepid set of quarterly numbers coming in. The net profit and revenue have taken a sharp hit on a year-on-year basis. So that's Ircon International, 5.5% almost lower in today's trading session. And lastly, let's talk about Jubilant Food. Numbers have just come out a few minutes ago, and 3.5% cuts, steep cuts coming in across that stock on the back of its numbers as well. EBITDA margins have all shrunk on a year-on-year basis. PAT has also seen a slight bit of a downtick coming in. So that's a lowdown on some important events that happened today, AMFI data being one of them. Good set of numbers coming in. Nifty has managed to hold above the 23,000 marks. We'll give some time for these rates to stabilize, but looking good right now for the Nifty, and let's hope tomorrow we manage to end in the green.